You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon and welcome back. Today is Thursday, 27th day of March 2025. Thanks so much for joining us. Wherever you are, we're just glad to have you right here or right now. We do 2 live broadcasts every trading day. The first broadcast, that's our live training room, and it is reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about 50 minutes, he'll walk you through it step by step, right on the screen. You can get signed up today, get your indicators indicating today, and your trial will officially start tomorrow and then carry right on through next week. There's no credit card required. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and we come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. If you're new to the world of CFRN, it's a great way to get to know who we really are, not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to, but it's a great resource to have in hand as you begin your journey with us, to be able to look back and see from whence we came to where we are today. It's all there for you. youtube.com/CFRN. This is our afternoon schedule each and every day. So we'll dive right into our daily devotional. The topic we're on right now, we're in day 12 of 14. Doing things that matter. Today's scripture is Luke 6, verses 43 through 45. And I'm going to share it with you from the Message translation. You don't get wormy apples off a healthy tree, nor good apples off a diseased tree. The health of the apple tells the health of the tree. You must begin with your own life-giving lives. It's who you are, not what you say and do, that counts. Your true being brims over into true words and deeds. That's Luke 6, verses 43 through 45. So today, leading courageously, part 2. It may sound like Captain Obvious to say that our words matter, but I'm not convinced that we really believe that. I say that because we spend a lot of time talking about things that don't matter. Some of us love to talk about sports. In fact, some of us have passionate conversations about sports every day. Others constantly complain about people or how busy they are. Then there's that parent that will never shut up about their perfect kids. In Luke 6, Jesus says that the mouth says what the heart feels. In other words, we talk about the things that matter to us. Think about it this way. If someone were to meticulously track your words and chart the subject matter that you like to talk about, what would be revealed that matters to you? Would it be gossip? Small talk about the weather or sports? Conversations that revolve around yourself? Where would Jesus, faith, and God's mission rank in the subjects that matter to you? Perhaps that is an unfair way to think about it. Perhaps just because many of us don't talk about Jesus or our faith as much as we should, well, that doesn't mean those things don't matter to us. Fair enough. If we love Jesus but struggle to talk about him, then I must conclude that we simply lack the courage to talk about what matters most to us. For many of us, I believe it's fair to say that Jesus needs a little more volume in your life. He shouldn't be a rare sighting in your public life. There's a story in Acts where Peter and John are told to quit talking about Jesus, and they respond by proclaiming that they can't quit talking about what they've seen and heard. There are many times in life where courage is required to speak. Some of our greatest potentials as leaders lie within the power of our words. They have the power of life and death. So I ask, will you have the courage today to speak about the things that truly matter? Let's pray. Heavenly Father, help us to be like good trees, bearing good fruit from hearts rooted in your truth and love. Cleanse our hearts, fill them with kindness and grace, so that our words and actions reflect your goodness. Let what flows from us bring life, encouragement, and glory to you. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Thursday. Now, Thursday means that tonight we have a members-only workshop, 8 p.m. Eastern. So if you're a member, have your questions ready. And if you've been on the trial and you're ready to become a member, then get that taken care of so that we can get out an invitation to you via email this afternoon so that you'll be included in the members-only workshop tonight. Okay? All right. Let's take a look at the numbers from around the world. Starting here in the U.S. with the cash markets, the Dow down 91 points, NASDAQ down 4, S&P 500 down 2, the Russell 2000 down 9. In the commodity basket, crude oil up 14 cents, trading 69.79 last. Gold up $40.90, trading 3,063.40 last. Now that's a gain of almost 1.5%. Silver up 86 cents, trading 35.09 last. That's a gain of over 2.5%, or almost $5,000 per contract traded. In the Asian markets, at the close, the Nikkei fell 227 points. The Shanghai rose 5. The Hang Seng gained 95. And in the European markets at the close, FTSE down 46, the DAX down 182, which is almost 1%, and the CAC down 48. So that gave us a mixed day in Asia. It was a red day for the UK. And at the moment, it is now a mixed Radio Thursday in the US of A. In fact, things have changed a bit. So let's go over them again. The Dow down 82, which not a lot for the Dow. The NASDAQ up 8. That's practically nothing for the NASDAQ. S&P up 1. Is what it is. And the Russell 2000 still down 9. So we've got divided markets again at the moment. But again, we've got nothing deep into the green or nothing deep into the red. So it's that tug of war that we talk about, especially for those who trade futures, the 4 major indices. We like to see them all the same color. They can be all red. They can be all green. Doesn't matter. Because as a futures trader, you can be long, short, long again, all in the same hour if that's what the chart in front of you tells you to do. Now, of course, investors want to see everything green all the time. But futures is a little bit different story. When we have all four of the major indices red or green, that's when we have better follow through on our trades. That's when we're more likely to actually reach the target that we have for our trade. But when they're divided as they are right now, that little tug of war, you can still get a good entry. You can still get into a decent trade. It just might not go as far as you expected it to. So those are the numbers. So let's go to the news. Play ball. Yep. The 2025 Major League Baseball season begins today, with 28 of the league's 30 teams taking to the field. The action starts with the Milwaukee Brewers heading to the New York Yankees at 3 p.m. Eastern, with marquee matchups including the Boston Red Sox at the Texas Rangers and the Los Angeles Dodgers hosting the Detroit Tigers at 7 p.m. Eastern. One of the biggest storylines entering the season is whether the defending champion Dodgers can repeat as World Series winners and break the all-time single-year wins record. The feat is currently held by the 1906 Chicago Cubs at 116 wins, tied by the 2001 Seattle Mariners, but Dodgers shortstop Miguel Rojas has said he thinks the club could win 120 games this year. Meanwhile, the Yankees, who lost to the Dodgers in last year's World Series, look to rebound from a Game 5 meltdown that led to the series loss. Two teams, the formerly Oakland Athletics and the Tampa Bay Rays, will spend their seasons without a home stadium as they transition locations. The Supreme Court ruled yesterday, and for once it didn't have anything to do with President Trump. Yesterday, the Supreme Court upheld regulations of ghost gun kits, or disassembled guns designed to be built at home. The 2022 rule treats dealers and manufacturers of the kits as subject to the 1968 Gun Control Act, requiring them to place traceable serial numbers on kit parts, conduct background checks on potential buyers, and more. Law enforcement has recorded a steep rise in privately made firearms recovered at crime scenes since 2016, prompting the Biden administration to regulate them. Gun rights advocates challenge the rule, arguing the kits are for hobbyists and do not meet the definition of a firearm as written in the 1968 Act. In his majority opinion, Justice Neil Gorsuch claimed the ease with which the kits are assembled, in many cases less than 30 minutes, does meet the Act's definition of a firearm. In separate dissents, Justice Clarence Thomas and Samuel Alito argued that disassembled kits do not meet the statutory definition. During oral arguments, Alito had suggested viewing a ghost gun kit as a firearm is like calling eggs, ham, and onions an omelet. Where do I stand on ghost guns? If it matters, it doesn't. I don't think it's a good thing. You know, with these 3D printers, and blueprints you can download off the internet. You can cook your own gun up at home. It's untraceable. They fall in the hands of gang members. Horrible things happen. Uh, Now, I'm all about the right to bear arms. That is very much constitutional. But at the time our forefathers penned the Constitution, there were no 3D printers. And the idea of a ghost gun, I guess, had not yet entered anyone's mind. So, I guess I have to lean with the Supreme on this one. The Fed has a new favorite word, uncertainty. I would say that the Fed and Capitol Hill has three new favorite words, but you can make it one word and call it FUD. Fear, uncertainty, and doubt. Imagine if our founding fathers had been paralyzed with FUD. Would there even be an America today? Perhaps not. However, this article is dealing with the U in FUD, uncertainty. It started last week with Fed Chair Jerome Powell, who used the word 22 times during his March 19th remarks to reporters following the central bank's decision to leave rates unchanged. Uncertainty is remarkably high, Powell said of the U.S. economic outlook. His colleagues have since spoken from the same script. New York Fed President John Williams last Friday used the word 12 times while delivering a speech titled Certain Uncertainty. This week, Fed Governor Adriana Kugler cited a, you guessed it, heightened level of uncertainty, while St. Louis Fed President Alberto Musalem warned about considerable uncertainty in determining the effect President Trump's tariffs will have on inflation. The certainty of this widespread uncertainty for central bank policymakers was also on full display in the Fed's quarterly summary of economic projections, which was released yesterday, even as officials maintained a prior prediction for 2 rate cuts at some point this year. Now, at what point? We don't know that yet, but we hope to find out at the next Fed announcement. What Fed officials changed in those projections was their outlook on inflation, higher, and economic growth, lower, with Powell telling reporters that a driving reason for the change was uncertainty stemming from Trump's plans for an aggressive slate of new tariffs. It's hard to know with any precision how the economy will evolve, Williams said last Friday, acknowledging there is certain uncertainty in monetary policy. Another sign of uncertainty in the summary of economic projections, nearly all Fed officials said that risks to their unemployment forecasts were weighted to the upside, and risks to their inflation forecast were weighted to the downside. Okay, this one from Reuters. Coming soon to a store near you. Double-digit coffee price hikes. I thought Starbucks had already made coffee as expensive as it could be, but apparently not. If your favorite coffee beans have vanished from the shelves, don't worry. They'll return soon. Now, the bad news, they'll be 25% more expensive. Roasters such as Lavazza, Illy, Nestle, and Dowie Egberts maker JDE Pete's are currently in talks with retailers about passing on costs from a near doubling of Arabica coffee prices over the past year, according to 8 industry sources. Now, that's over the past year. Trump's only been president for a couple months, so. Raw Arabica prices have spiked due to 4 successive seasons of deficit, as adverse weather makes it harder to grow enough of the delicate beans to meet consumer demand. As roasters press for price hikes, grocery stores and supermarkets push back, postponing signing new supply deals to the point where some have just run out of coffee. In one such example, Dutch supermarket chain Albert Heijn, the country's largest, ran out of coffee products like Dowie Egberts and Senseo. The products returned to the shelves on March 20th, albeit at higher prices. JDE's purchase prices have increased significantly. We will absorb part of this price increase to keep the products affordable. JDE Pete's, which has, and that's a roaster and I think also a grower, is warned of a profit decline this year due to surging coffee costs. So maybe they're just roasters and not growers. They said the standoff with buyers in the Netherlands and Germany resulted in some of its products missing from the shelves. It added, however, that it has since concluded 90% of its price negotiations globally. So what would America do without their Morning Joe? And I don't mean that disgusting TV program. Oh, there's plenty of mixed sentiment about the Elon Musk-led Department of Government Efficiency, DOGE, as it heads into the 3rd month of operation. And whether people agree or disagree, a whole lot of people remain optimistic. IBM's vice chair and former director of the National Economic Council, Gary Cohen, said there is waste, fraud, and abuse in the government. He added that getting rid of it has to be done. Now, I think every president has said they're going to do this. Finally, we get one that actually does it, and the world becomes a dumpster fire. All those cushy bureaucratic jobs where all you really had to do was just go to the mailbox. You didn't even have to go to the mailbox once a month. It just got your check just got directly deposited into your bank account. Other than that, no real accountability. Maybe at the end of the month, you got to fill out a few reports, get those sent in, just so the box gets ticked. Nobody ever actually reads the reports. I mean, that would be like work. Nobody wants to do that. It absolutely amazes me that any person who is not who does not benefit directly from this pork, a benefactor of the pork, why would they want to see their tax dollars thrown away on absolute nonsense? Well, a lot of these protesters, a lot of these agitators, as I've said, they're paid actors. They show up over here, then they show up over there, and then there's something in another state and they show up there. We have cameras, guys. We have facial recognition software. And since you're unemployed officially, who's paying for your travel? Who's paying for those professionally printed signs? Who's paying for your lodging and your meals, the transportation, all of it? Now, Gary Cohn, a former top executive at Goldman Sachs, served as chief economic advisor during the first Trump administration, where he managed the economic agenda. His professional life has also taken him to plenty of locations where he was called upon to assist with tough decisions, including where to make cuts that impact the bottom line. So he said he understands what Musk is trying to do. There's not a business I've ever been involved in that when I walked in, I didn't try and figure out where the money was being wasted, where we couldn't streamline it, where we couldn't get rid of certain things. Doge was a controversial proposal from the beginning. With Tesla CEO Elon Musk at the helm, the department set an initial goal of cutting $1 trillion in wasteful government spending and put government entities under its harsh microscope almost immediately. These moves drew praise from some criticism and some criticism from others after layoffs and resignations rained down at agencies, only to be clawed back in some cases. Cohn said you're not smart enough day one to take the scalpel out. You have to take out the machete. And then you slowly add things back in. Cohn had other suggestions for where Doge can look and how to proceed. I think we need to look holistically at the government and see how many redundant services we have. Looking at the financial services industry as an example, Cohn noted that the typical bank involved in the trading world can have up to 10 regulators overseeing it on a daily basis, noting that European and Asian banks have 2 regulators. He added, maybe we need 3 or 4 in the US, but we probably don't need 8. The Commodity Futures Trading Commission, CFTC, regulates the futures market, and the Securities and Exchange Commission, SEC, regulates the equity market, while both protect consumers, he said. Then you've got all these consumer protection regulators. Well, isn't that the SEC's job? Isn't that the CFTC's job? Why do we have multiple regulators costing us tens of millions, if not hundreds of millions of dollars a year, doing the same thing? Now, with all those regulators, they didn't catch the greatest Ponzi scheme of all time, did they? No, they didn't. He got away with it for a long time. From Bloomberg, Advanced Micro Devices, AMD is falling further behind NVIDIA Corp. Currently today, AMD is down 3.5%. NVIDIA is down a little over 1%. Intel is down 1.5%. You know, it's falling further, not in price just, but in its technological capabilities, a fact that could continue to pressure the stock, according to Jefferies, which downgraded the chip maker to hold. AMD has considerable ground to cover before their products can compete, wrote analyst Blaine Curtis, who previously had a buy rating on the stock. NVIDIA's chips have a significant performance advantage over AMD's, and this gap should widen further with NVIDIA's upcoming product cycles, a sign of AMD's limited traction in AI. AMD shares are down $3.74 at the moment, trading 106.46. It's down about 3.5% on the day. And last, Mexico is working to carve out an exemption for its critical autos industry after Washington announced tariffs on imported vehicles, according to Mexico's economy minister. U.S. President Donald Trump unveiled 25% tariffs yesterday on auto imports, escalating his global trade war and threatening the USMCA free trade agreement Mexico and Canada have with the United States. Speaking from Washington, where he has been meeting with top Trump administration officials, Mexican Economy Minister Marcelo Ebrard said negotiations were ongoing to ensure preferential treatment for Mexico. He said if they are going to change the system, if we're going to a system of such high tariffs, what we have to seek is a preferential treatment for Mexico in a way that we have conditions that protect our jobs and economic activity in Mexico. Trump's plan, announced yesterday, partially exempts tariffs for vehicles and parts that comply with USMCA's rules of origin, but only for the value of their U.S. produced content. USMCA compliant auto parts will stay duty-free until U.S. agencies can determine a process to apply tariffs to their non-U.S. produced content, according to the White House. Mexico exported 2.5 million vehicles to the United States last year, according to S&P Global Mobility. And that's the news. Logic 247. That is our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, silver. Currently, we are in week 347. Over the last 347 weeks, we've issued over 19,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, Valerie did this recap last night at 9:30 p.m. Eastern. She was either unavailable or there was just simply nothing changed from that recap. I'm thinking we've probably had some changes today with some of the movement we've seen, but she'll update it this afternoon. So at the time she did the recap last night, so far this week, since the markets opened Sunday night, we issued a total of 29 alerts. Still waiting on the outcome of 9. That gives us 20 actionable alerts, of which 3 or 15% would have been stopped out, again based on market structure and that simple process we teach all of our passport holders. Now, again, last week we had a total of 44 alerts, 35 actionable, 17% stopped out. Every logic alert has an entry price, an initial target designed to help you get your goal for the day, and then additional targets, and then a final trade to target. Yeah, you can trade them, but the true purpose of the Logic 247 alerts is to teach you how to read a chart. You want to get to the point where you look at any chart of any market, any time frame, and with the use of our humble indicator set, instinctively know what the next high probability move is. Just keep in mind 20% of the time the market won't do the next high probability thing. So nobody knows what's going to happen next in the market. However, once you learn to read the chart and understand what our humble indicators are telling you, you can know with a great deal of certainty what the next high probability move is. But that's very different from knowing what the next move in the market will be. If you're looking for that 100% holy grail, I'm never going to get stopped out again, people are going to just take your time and treasure again and again till the day you pass. Stop. The only secret in trading is learning how to trade. And in order to learn how to trade, you got to first learn how to read the chart. And that is the purpose of the logic alerts. If you use them properly, pretty soon you'll have no need for the alerts, because you'll see the exact same thing we see when we look at a chart. So we still got one more day, and we'll see what happens with these when Valerie updates the recap this afternoon, and then whatever goes out today or tomorrow, that'll wrap our week up. But last week we finished at 17%. This week we're sitting at 15% stop down. And that's after 347 weeks, over 19,200 individual alerts. That's a lot of alerts. Goodness gracious. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts. Now they're different. The logic alerts can come out at 2 a.m. or 2 p.m. because futures trade around the clock and we have traders around the globe. So our day session is their night session and vice versa. But the CTAs, the concierge trade alerts, they're different. They're published shortly before or after the Globex Open. Last night, they came out 5 minutes ahead of the Open. The Thursday session began last night at 6 p.m. Eastern. Just like tonight at 6 p.m. Eastern, that will officially become the Friday session. However, there was an unusual event that happened last night. We had a gap lower open, and that's really unusual on a Wednesday night. Okay? With futures, you typically only see gaps Sunday night, and occasionally during earnings seasons when there's a big hit or miss. So last night was an anomaly, and so in fact a lot of these targets got jumped on the open. They got gapped over. That's such a rare thing, but the truth of the matter is it happened. So 5 minutes before the open last night, all of our traders had all of these targets. All of our members and trial members. The S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. But again, on the indices, the gap lower open took the steam out of having the numbers. So we'll keep an eye on that, and maybe the markets are getting to such a point where we're going to see more frequent gaps. I think that's a one-off, but we'll see what happens. We will see. So let's go look at the daily chart. As we do, okay. Last week, we spent the whole week straddling the 24% reverse fib. And last week in the members only workshop, red and falling had turned to blue and climbing, and we said, well, we'll probably see a move up to the VVC and the 38% fib retracement. And we did. We actually closed slightly above it on the 25th. Yesterday brought us back down to close below the step line. Now the step line had held us up all last week. Support, 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 support. Yesterday we closed slightly below, and then we opened last night. We had that gap lower open, okay, and then we rallied up. Now again, the black step line was support, 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 support. Today it became resistance. So right now price is trapped. You got the step line overhead, resistance, high of the day. And you've got blue and climbing and the 24% fib retracement right here. Support times 2. All alerts are created on the 30-minute chart. This is the S&P. This is Thursday and Wednesday, Tuesday, back here's Monday. We had a really kind of sideways week until yesterday afternoon. Had a pretty substantial sell-off. But then as we hit this zone, okay, support, it bounced us right up to resistance at the zone overhead. And then the gap lower open took us right back down to the zone for support. Red and falling got below price, turning it to blue and climbing, and it took us back to the zone. Resistance. That always sends a market looking for support at the zone, 5742/43. Support sends us looking for resistance, which we found at the zone. Resistance sent us back to support at the zone and the short target. And then on this move right here, we got above the zone, but we failed to take out these highs right here. Sign of weakness. We're now back below the BBC. And it looks like blue and climbing is hooking over to turn to red and falling. We're back at the short target. We're sitting right on top of the zone at 5742/43. If price trades down into this area, 57.28 down to 57.22, that's a nice 6-point window of opportunity. I would keep my eye on that. Okay. Now, but don't forget, price is trapped. Now we got a little doji. Okay. Resistance here, support times 2 here. Should we trade through the step line, then we're going to have resistance here and then here. Okay. On the Dow. Gap lower open. See how it gapped below the target that came out 5 minutes ahead of the open. Unusual, but that's what happened. And so red and falling gets below price, turning red and falling into blue and climbing, and off we go. We consolidate at the zone. Now the vertical line separates today, Thursday, from yesterday, Wednesday. I explained that. These are the weekly trading zones, which are published Monday morning at 6:15 a.m. Eastern for the past 15 plus years. All members, all trial members have gotten the zones every week since December 14th, 2009. Once they're published, they're carved in stone for the entire week. So, the long target, of course, was based off the bearish cross. That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. We came a little bit shy. Okay? The long target was based off the bearish cross. Okay? We missed it, and we missed it. Red and falling finally took us below the BBC. Now the pullback here held, but we reached down to the target to find support. These are the targets that were published, or the zones that were published Monday morning at 6:15 a.m. Eastern. So we got a bounce, then we got a leg, we got a retracement, and then we got this huge leg here. This is the 9:30 opening candle. It was red all the way down, but before the 30 minutes were up, we ended up closing green, right below this zone. So we got through the zone. The pullback to the BBC holds more often than not, and it did in this case. So that sent us back down to the target. Buyers came in and ran us back up to the zone resistance. Resistance has now sent the market looking for support. So 42,555 to 42,535. That should be an excellent window of opportunity. But expect support here until proven otherwise. The Russell gap lower open, 6 p.m. Eastern last night. Red and falling turns to blue and climbing, takes us to the zone through the BBC. Then we get a pullback, we reach down, touch the zone, bounces up into red and falling, and then down we go, all the way through the short target, and we even spiked the zone, the same zone we hit coming off the open last night. We spiked it a little bit more. We got all the way down to the low is 2071.7. So support bounces us back to resistance. Resistance, the BBC, pullback held, sent us back down to the short target. Support sent us up to resistance times 2, the zone and the BBC. So resistance sends the market looking for support. If we continue lower in 2077 to 2075, that would be sufficient to get your goal for the day. You only need 2 points with the Russell. 77, because you want to make sure you clear these lows significantly. 77 to the zone at 74/75. 2 points goal for the day. In Q, all right, again, we opened here, ran up to the zone, found resistance, ran back down and found support at red and falling as it got directly below price on its way to becoming blue and climbing. So support sends us to resistance at the BBC. Resistance sends us looking for support, which we find at the short target. That bounces us back up to the BBC, which sends us back to the short target, back to the BBC, back to the short target, and we almost made it to the zone overhead. Not quite. Now we're sitting again. There's 1, 2, 3, 4. For the 5th time, we're sitting right on top of that short target. If we break through it, you got a nice window of opportunity right here from 19,992 down to 19,9, we'll call it 52. So that's 40 points. $20 a point, $800 per contract traded. All right, Michael's here, so we'll pick up with crude oil when I come back and finish this recap. Michael, take it away.
Yes, got it. Coming over. And you should be looking at it now.
Yes.
All right. Good.
Yeah, everything looks good.
Good. Here we go. Good afternoon, everyone. Today is Thursday, the 27th day of March, 2025. Now, if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. Click on that purple button, and it will bring you to do I even have it up here? I don't. Well, let me click on it then. It'll bring you to this page. On this page, all we ask for is your name, your email, your phone number. Down here at the bottom, I actually updated this. So if you want Ninja charts, give us your machine ID. If you're just going to trade on Ninja, we don't need the machine ID. We do need your TradingView login ID, your TradingView username, right? We don't need your password or anything like that, just your username. If you don't have one of those, click on this link right here, all right? That will take you to the page, walks you through getting one of those. All right, we had a pretty good day today. Did we start out with a stop out today? No, we didn't. We got to go on the first trade today. Anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 27th day of March, 2025, as I said. On the NQ, we're up 309 ticks. On the Russell, we're up 25. On the gold, we're up 17. And on the ES, we're up 30. That puts us at $2,215 a contract on the morning session. Today, it took 5 minutes and one trade to get to the goal for the day. At that point, we're up $1,375 with 10 contracts on. So we took a total of 45 trades this morning. So on the month now, we're at $24,200. That's over 14 business days, averaging $1,728 per contract per 2-hour business day. Now, on the year, we're $81,682. That's over 51 trading days, averaging $1,601 per contract per 2-hour business day. Now, if you were to quit trading when you get your goal for the day, and you would add 1 contract per month, so far this year, you would have earned $16,087. You'd be on your 3rd contract right now. Now next week we're gonna go up to 4 contracts, but you'd be on your 3rd contract and you'd be up $16,087, averaging $1,930 per hour. Okay. All right, that is that. Now let's get into the trades that we did. We had a good number of trades today. There's a trade right here on gold, by the way. We had a good number of trades today. The gold already pulled back a little bit. Gold should pull back to this right here. Greg, are you in here right now? Greg, you are in here. Okay. So there's some information out there that is just not true. Let me just explain what I mean by that. With range bars, there are some places that say that range bars, they always close and then the next bar opens where the last one closed. It has to exceed the bar. It has to exceed the range of the bar, so it should go at least 1 tick more. All right, now there's some platforms like DT Pro used to do this. It would show the open right at exactly at the bar, exactly at the close of the next bar. Now that wasn't always the case, but it is seldom the case that the open and close are right next to each other. Okay, look at this right here. You see how the close was there and the open was up here. The close was here and the open was up there. The reason I'm saying this is because range bars, in a perfect world, you know, at the end of one bar, you'd start the next bar. When it exceeds that, it goes to the next one and starts the next bar, 1 tick higher. All right. In a perfect world, that's how it should work. That's not how it works in reality. Now, oftentimes you'll see me say something like, you see this right here, it should have pulled back down to here. So when you got the push down into the oversold right here, that was a trigger, right? Now, I say to buy the open to the next bar or better. Now, in this case, you were expecting it. Well, I was expecting it. Now, this is a 50% retracement right here. So it did the 50% retracement. That's exactly what you got right here. But this should be a leg down, right now. All right, so I would have anticipated this going down further, getting a better entry. Okay, Greg, do you see what I mean by that? I don't have the question box out. I suppose I should take that out. I did take that long trade, by the way. Here it is. I'm going to bump my stop to break even on it right now, and I'm going to lock in 10 ticks. That's $1,000 right there, and I just got out with $1,000. See, the entry was right in here. Is where I got the entry on that one. I don't know if Greg is listening. I don't see him typing anything in, but anyway, that was more directed toward him. So let's go back and see what we did with gold today, not counting that last trade right there. All right. In here, our first trade on gold right here, we stopped out. We're minus 10 ticks on that. Then we had a break even. Then we stopped out again. We're minus 20. Then we had a 16 tick trade right there that got us to minus 4. Then we had a 4 tick trade that got us to break even. Then I'll go in here. Then we had a 5 tick trade there and we got positive. We're at plus 5 then. And we stopped out, put us back down to minus 5. Then we had a break even and a small win that got us to minus 3. Then we had a plus 10 that got us up to plus 7. Then we had a plus 10 that got us up to plus 17. And then I didn't record this one, whatever I got on that one at the end. I think it was a small gain at the end. I don't remember that. I guess I could go look and see what it was, but it was right here. Why don't I go look? Let me just go check that out. It was gold, right? GC. And what time was that? 11:20. 11:20. Slide this over and see. Spin that a little bit. 11:20. It's odd that it doesn't actually, it was GC, right? GCE. I went from, it was a short trade, and I shorted at 54 point, I'm sorry, it was a GC. Okay, I see. I shorted at, no, that's the wrong one. GCM. Is this the right one? No, that was GCJ. Okay, this is GCM. Here it was. 93. No, it's not a 93 either. I'm trying to find the actual fill on that one, and I don't see it in here. I have a 10 tick gain. The last one that I got was a 10 tick gain. That was this one right here. I did show that one, but I don't show that one. Anyway, doesn't really matter. I didn't count it in the totals anyway. During the break, there was a trade right here, worked out well. Another trade right here that worked out well. A short right there that didn't work out so well. I mean, that did work out well, I'm sorry. Another short right here that worked out well. A long right here, this would have stopped you out. A long right here, that would have stopped you out. A long right here would have worked out. A long right here would have eventually worked out for you. And a short right here would have worked. A long here would have worked. A short right in here would have worked out. A short right in here, it would have been really close to stopping you out right there. This is the last one right here. Worked out pretty well. And that was it for gold. We ended up with plus 17 on gold this morning. Now the Russell, we hardly traded at all on the Russell today. But we started out here, we had a break even, then a plus 5, then a break even, another break even, and then a plus 20. And that's what we ended up with on the Russell. This was a nice move right here, right up to the top of the chop, and then it went right back down to the bottom of the chop. That was some nice chop right in there for, a few moves up and down. It didn't really give us any trade opportunities except the one that I did take. This one right here gives a short right here too, I guess. Give a short right there that I got the break even on. But it didn't give us another one. Since then, there was one long right there. And that's really it. So not a lot happening on the gold. I'm on the Russell. We did roll the gold. That's probably something you should also know. We rolled to the M contract. Now, Dwayne didn't roll to the M contract yet. He's going to roll on Sunday. All right. The majority of the volume is still in the J, but on my DOM, it was saying I should roll. So I just did, so I get rid of that notice on my DOM. The ES, we had a bunch of trades on the ES today. And what did we end up with? 30 ticks. Okay, we didn't end at the high of the day on the ES. At the high of the day, we're up at 40 ticks, so we ended with a stop out on the ES. Let's slide all this stuff over here, as far over as we can go. There we go. All right, so this right here was our very first trade on the ES. We picked up 11 ticks on that one. Then we didn't trade it again for a little while. We had a break even. Then we picked up 9 more ticks to get us to 20. Then we had a break even. Then we picked up 12 ticks to get us to 32. Then I made a mistake right there and took a long trade. And I stopped out. That put me down to 22. Then I stopped out again. That put me down to 12. I had a couple of break-even trades. Then I went from 12 up to 20, so I had an 8-tick trade. I had another 8-tick trade to get me to 28. Then a break-even, and then another mistake. I stopped out and I went from hang on. I went from 28 to 32, somewhere in there. And then I went from 32 down to 22. Then I went from 22 up to 34. Then I stopped out and I went down to 24. Then I went up to 36, and I went up to 40, and then I stopped out and went down to 30. That's how I ended the morning session with the ES. Now, during the break, there was a long trade right here at the open of that bar. Would have stopped out. A short trade right here, you could have gotten it right back. A long trade right there, could have gotten more of it back. A long trade right here on this bar would have stopped out. A long trade on this bar would have stopped out. A long trade on this bar would have gotten some back. A short trade on that bar. If you actually shorted this bar, you were long from this one, so you probably wouldn't have. But if you had actually shorted that bar here at 53, it ran up to 54.75. It would have to run up to 55 to actually stop you out. So it was really close in there. There's a long here that worked out well. A short in here that would have just barely kept you in the trade. A short here that worked out okay. A short here that worked out really well. A long here that worked out okay. A long here that would have stopped you. A short here that would have gotten it right back. A long here that was good for about 15 ticks. A long here on that bar was good for 3, so that meant it pulled back 7, so it did go up after that. A long here, that bar was good for 7, and then whatever's on the next bar. And that was it. So we had a ton of trades on the ES today. We ended up with plus 30 on the ES. Now the NQ, we had quite a few trades on the NQ as well. We ended up with 309 ticks on the NQ. We had our share of stop outs in there. All right, so our first trade on the NQ was right here. We picked up 104 ticks on that. Now I had traded the NQ last night in the middle of the night during the European Open. And so my DOM was a little messed up because I was trading on a 25 tick and my bracket was off. So I don't know what I did when I messed that up, but I ended up getting 104 ticks on that first trade. Then the next trade I stopped out when it brought me down to 44. Then I got a 75, brought me to 119. Then I got another 75, brought me to 194. Then I got a break even and another 75, brought me to 269. Then I stopped out down to 209. Went from 209 to 213, 213 to 253, 253 to 277, and then 277 to 297. And there's one more trade where I went from 297 up to 309. So there's one more trade in there somewhere. And we ended up with 309 ticks on the NQ. During the break, there wasn't that much movement here during the break. There was one short trade right here that worked out fine. A long trade right here that worked out fine. A long trade right here that would have been a break even. A long trade right there that would have been good. Scrolling over, a long trade right there. At the open of that bar, if you had a 60 tick stop, it might have stopped you out on this bar. You might have gotten to break even. It depends where you entered. You would have gotten 50 ticks back right here though, or something back anyway. And right over here, another 50 to 100 ticks right there. And that was the NQ today. So that was a lot of stuff. Again, if you're just coming in on YouTube, there's a long right here on gold. We had a long a few minutes ago on gold. Now what the gold should do right here, this, Greg, I don't know if you're watching right now. Okay, you are watching. What it should do right now, it pulled up here. It should do a 50% retracement of that. It should bring it back to right here. So the entry should have been right there. It gave a little bit better than the entry. All right, here's the trade. I'm moving my stop to break even. I'm going to lock in 5 ticks on that. And it should get up above the prior swing high. It should get up above 95.1. Should get up above right here. All right, but we'll just drop this down to 95. So we have 5 ticks locked in, and if you go right there, that's 20. So I guess we can just go to 20 right there. All right, so we're going to get 5, we're going to get 20 on this. Now, what I think it's going to do is get up here to the prior swing high and then probably pull back and hit some resistance up there and pull back. That's what I think it's going to do. Now, what I think doesn't really mean anything, but what the markets usually do does. Okay, and so in this case right here, Greg, you were asking me how I get the good fills all the time. I don't try to buy at the open. If I see that it should pull back 50% retracement, I give it the chance to do that. I see that the entry was down here, and I don't just dive right in at the open. I give it a chance to do what the market should do. Okay, you see how this one right here is coming together just like I thought it would? Now, it should get up to the prior swing high, right? It should go through the prior swing high, but I have 10 ticks locked in on this, and if it hits right there, I'll have 20 ticks. That's $2,000 with 10 contracts on. So, yeah, you just gotta let the market do what it should do, right? Now we get the indications. We've got 10 ticks. Now I'm not upset about that. I'm kind of happy we got 10 ticks on that. But I mean, all the stuff that all the stuff that we've gone over and we've taught and all that stuff. Markets go up, they come back. They go up, they come back. What should happen now? Another one of these right here should happen right now, from here up to here. Okay, that's what should happen now. Well, it should be at an angle, kind of like that is what should happen. Okay, but when it gets up here to the prior swing high, it might hit resistance. It usually does, and it usually gets pushed back down just a little bit. It might happen within this bar. This bar will close up like right here, right at the swing high, or pretty close to the swing high. So the next bar might give a wick above the swing high. There it is, just right below the swing high. Let me blow this up so you can see it a little better. Okay, let me blow it up like this, since this is the one we're really focusing on. Oops, I didn't mean to draw that. Since this is the one we're really focusing on. What should the market do? All right, in the bigger picture, right, we're below the YBR, so we're in a downtrend. In the bigger picture, this is a 50% retracement of this leg down. Let me draw that for you so you can see it. Okay, we're right at the 50% retracement of that leg down. It tried to push it down right here, but it didn't go. All right, so that's why we trade what's in front of us. Now, it's in the overbought right here. The overbought said short it right here at the open of that bar. In the bigger picture, what should happen right now is, hang on, how do I use this? Bigger picture stuff. Oops, a little twitch in my hand right there. You see that? Bigger picture stuff says this is what should happen. Okay, but within that, you have pullbacks within that, and we can work with those pullbacks within that. That's what we've done. There's a trade right here that I picked up 10 ticks on. There's a trade right here that I picked up 10 ticks on. So while it was pulling back right here, I managed to make $2,000 with 10 contracts on. So you should know that the market's always doing the same thing, right? They go up, then they try to come back. They usually do around 50% retracement, and then they go up. Now, on the way up, that's important, right? When it gets to that level, oftentimes it's going to meet a little resistance there. Once it breaks through it, it might chop here a little bit. It might go through and give you a wick and pull back and give you a secondary entry. So your first entry was down here. Now it might give you a secondary entry right here, okay? As it completes this leg length right here, as it completes that leg length, which is going to go from here up to there. See, so all that stuff, right? So when you get the pullback like this, and it hasn't quite gotten down to that 50% retracement, well, let it go a little further. You're probably going to get a better chance to enter on that. Okay, and you don't have to jump in right at the open. Let it go a little bit. If you miss the trade, there's always going to be another trade. There will always be another trade. So don't get upset if you miss a trade. If you miss it, so what? It doesn't matter. The next trade could be much better than that one. You don't know. Okay, so what happened right here is it came down, it gave us this, we took the 10 ticks on that. It didn't exceed the prior swing high, so that shows weakness on the upside. So that supports this part of the move right here, right? That's what that's suggesting. This is what's going to happen because it failed to put in the swing high right there. I know you have higher highs and higher lows right here, but the trend just stopped and you're in chop right here. So the sooner you recognize that you're in chop, the sooner you can adjust your trading to work with the chop, right? So you had the short trade, we had the long trade from here, picked up 10 ticks. We had the long trade from here, picked up 10 ticks. There was a short trade from right here. You could have gotten another 10 ticks. And when that gets down into the oversold, if the blue is by itself, it should be down here somewhere, and you could probably ride it right back up here. Okay. But you see how far down it should go. So this bar right now, this is a 9 range bar, and this bar has a high right here of 93.7. So it's going to have a low of 98.8. I'm sorry, 92.8. 92.8. It's going to close right here. So in a perfect world with the range bars, by that definition that you would send to me, it would open there at 92.8, right? But it's not going to. And it should go down a little bit further than 92.8. It should drop down to 92.6, 92.5, probably find this area of support right here. So if this bar does close down, the open of the next bar will probably not be the best entry point that you're going to have. It'll be an entry point, but it won't be the best entry point. Okay, now none of that happened. We didn't get the down close. We didn't go into the oversold. None of that happened. The one thing it did do, though, was stay right in the chop range here. You see, the same information applies. If it closes down now, it's just going to be higher than the 92.8. It'd be a little bit higher than that. Okay. All right. So now, remember how I used to have a lesson plan in the morning session? I haven't really had a lesson plan since December. It might have even been August. Once I finished the 24/20 blueprint in August, and I switched to showing you how the trigger really works, how it gives you more information. And then in December, where I changed the paradigm, I did a paradigm shift to buying when you go into the overbought or oversold instead of when you come out of it. And then the new year began, and I started with 10 contracts and just stayed with 10 contracts. But we've been doing the same thing day after day after day. So you see I was jammed up in this chop right here. You can't really do anything with that. So I'll bump over here, and we'll see if we have any other trades coming up. Oops, get rid of that. Didn't mean to do that. I have reason to believe that the NQ is going to go up right here. It's the last indications it gave right here. 7 ticks, 17 ticks, 42 ticks, 40 ticks that way. And that's just the beginning of it. That's the beginning of that bar. The bar after it might have gone even further. Like this one right here. All right. So let's analyze the ES a little bit right here. Right? This is the leg down. This is the leg up. This is the leg down. So you did a 50% retracement of that leg down to push down more. But should it really go down more? You know, that's what you wonder. Now, if you just took the trade right here at the open, you did well. You're okay with it. But you're in an uptrend, right? So it should be going up. So this is a retracement of this leg up right here. Okay, that's what you're looking at. So let me draw that for you. Okay. It's a retracement of that leg up. So you hit the 50% retracement of the leg up. I drew that the wrong way. I should draw it from here up to here. But you hit the 50% retracement of the leg up. Okay, right there. And you went through it. I drew it wrong again. But you went through it. And now it's pushing down. It said to short it right here at the open. Okay. Looking at just this little bit of information, if you have just this little bit, hang on, I'm trying to bring something over here so that I can show you just that little bit of information. If you have just this little bit of information right here, right, with nothing else, if you're only working with that, and this is your leg down, this is a retracement of that leg down, this is what it should do, right? It should go down. It should actually go down this far, from here to here, far down. I don't know exactly how far down it is, but we can draw it and see. It's this far, from there to there down. Okay, that's what it should do right now. All right, so it got into the oversold right here. Now, getting into the oversold, it should have gone down even further right here. Okay, that's right here. The open of this bar is where it got into the oversold, so it should have gone down even further. That's why I was drawing that in, because you shouldn't open. I mean, well, I'm saying you shouldn't. You could have bought at the open of that bar right there, and you'd still be in it right now. You'd be just at break even right now. If you bought right at the open of that bar, you'd be right at break even, maybe down a little bit on this. But I wouldn't be expecting much out of it, because it should go down even more. All right, but knowing that it should go down this far, or at least down to the swing low, but knowing it should go down that far, you would not have bought here at the open of that. Maybe waited till it got down here, all right, to the swing low, and bought there on this bar, all right, and that would have gotten you stopped to break even. And right now it should go down and hit this level right here, all right, but we don't have a trade set up for it. So I've been trying to talk about this stuff as it happens in the room in the morning this week, because the markets have been a little bit slower this week, and I've been trying to tell you the way to get the entries, the better entry is to let the market do what it should do. As far as, when you get the trigger, don't just go right at the open of the next bar, right? Let the market do what it should do. If it should keep going a little bit in that direction, let it keep going a little bit in that direction, get a better entry. Okay. Greg, that's how I, all the stuff that you would send me in that text message. You're wondering how I get those entries all the time. That's how I get those entries. All right, I don't jump on it right at the open all the time. As a matter of fact, I seldom jump on it right at the open unless it gives me a better entry right at the open, like right here. See, this retracement is 50% of that leg down. This right here is a spot to jump. Now, it already went a little bit further into that. So I could enter right here at the open, right there at the open. But it's already gone down. You see, it went further right there. It did a 50% retracement. It went a little bit further. You could have entered up here if you wanted to, and then you'd be well into profit right now. Okay. I didn't get filled. I waited too long on that. But you see what it should do, right? It should finish this leg down. Right here, it should get down to right here. You're at the swing low. You're in the oversold. You're at the swing low. So right now, it's giving you a buying opportunity. But it should go down just a little bit further than the open right here and bounce from here. All right, like that. This is where it should bounce from. If it's going to bounce, it should bounce from right here. Now, it might go down to the swing low, which is right here. Okay, this is this leg length low, which is right there. So right here would be a great place to buy it right now. Okay. A great place to buy it right here, because right now it should retrace up to here. Probably up to 46 right now is what it should retrace up to. Right, and looking in the DOM's suggesting it's going to go up to 49 right now. Okay, that's what the DOM is suggesting. The DOM saying it's going to get up here. See that number right there and that number right there? We don't have those. Well, we've got one way down here on the downside, but we're going to go to break even on this right now. Okay, now 46 is what I was suggesting to begin with, because that is a retracement, half a retracement of this leg right here. 5, 6 ticks. Okay. So $750. 46 is what I thought it was going to get up to. It just got up to 46.5. See, if you pick the market apart, if you just look at one market, you can do that and see what it should do. Every time it makes a move, you should see what it should do. And if it doesn't make that move and you get into chop, well, that's good. If it starts to break out of the chop and you get into a trend, that's where you're going to find trouble, because that's where the flat spots come. Okay, but like this right here, we just got a little bit of profit on this. And if it keeps going up right now and it gets up here to the top of this and stops, then that's okay. You're in chop. So you trade it back down, trade it back up, trade it back down until it breaks out of the chop. Just keep trading it. And remember, we're just trying to get the goal for the day here. We're not trying to trade 1,000 times. So far I've gotten the goal 2.5 times while we've been doing this. If I were doing it with just one contract, each one of those trades on gold was the goal for the day. And then I got a little bit on this one here. It's half the goal for the day. It was almost 2 3/4 times. Right? And this right here, what should it do? It should go down a little bit more, right? So you could have bought the open, and if you got the open, you'd be at break even right now. If you got the open, you'd be at break even right now, but it should go down a little bit more. Now, in my opinion, it's too late to do this trade because it's already gone to where you would have moved your stop to break even, right? But if it had come down a little bit further at the beginning, this is what I expect. I expect it to come down here and bounce off of this and then move up. See where we got to? Right here. It's not coincidence, It's not a coincidence that it went just that far. All right. I'm almost out of time. I have 1 minute left. Does anybody have any questions about any of this stuff? Let me say this. If you have not taken a free trial with us and you want to, go to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on the purple button. It's going to bring you to this registration page. On this page, all that we ask for is your name, your email, your phone number. Down here at the bottom, gives you TradingView login ID, username. They call it username, whatever it is. We need that, all right, to get the indicators indicating for you on TradingView. If you don't have TradingView, click this link right here. All right, click that link. It'll bring you to this page where it says right here, TradingView platform. Watch the video. Click on this. I am going to go and move that up to the top of the page. Okay. Yeah, I guess that's pretty much where we're going to end it, I think. Right, yeah, we got 9 more seconds. All right, so this broke out of the chop and kept going. Good. So now what should it do? Retracement should go all the way up to here. All right, so that's going to give you a flat spot on your retracement, probably. It'll give you a flat spot on the retracement up here at the top. So knowing that, this broke into a trend right here. Knowing that, are you going to short right here, or are you going to wait until it comes out of the overbought? What's the wise thing to do right here? It should pull back a little bit further. It should be getting up close on this bar. And then you're going to get a flat spot right here. There it is. There's your flat spot. There's the up close. So you could go short right now. This is done a 50% retracement with this leg down. You could go short right now, or wait until it gives us a down close and comes out of the overbought, and then you don't get trapped in the flat spot. Okay, but it turns into a trend right here by doing this. You have lower highs and lower lows right now. So this is where you make that decision. Am I trading with a trend? Am I going to be aggressive and trade as soon as it gets in there? Because right now you should be short if that's the case. Okay, but if you're going to trade with the trend in a conservative way, you're going to wait till this comes out of the overbought. And it's got plenty of room to get down to the prior swing low if you do that, like right there. If you did that, you would have had your sell stop limit. You could have had your sell stop limit waiting, and you'd be in the trade, and it should get down to here. So it's got plenty of room to get from here down to here to get you your goal for the day. That was a lot of talking. All right, I ran over my time. So that's all you got to do, right? It's the same stuff that we do day after day after day after day. All right, that's it. If you haven't taken the trial, I just went through that stuff again, right? if you haven't taken the trial, sign up for the trial. With that, I'm going to pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Sure.
Okay. There it is.
And we're going to pick up with crude, guys, but I just wanted to show you, Michael, where we're at on the daily. Got that little doji.
Right there.
Here's
Yep,
the
doji right on
24%
top.
fib and blue and climbing. So all last week, the black step line served as support, 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 support. Even this week, overshot it a little bit yesterday, closed below it, and now today it's become resistance. So price is trapped between step line and blue and climbing and this 24% reverse fib retracement.
Nice. So the news tomorrow morning, which is it should be a high, well, it is a high impact news event, and it's the highest impact news event we've had all week, I think. It should give us a push one way or the other. We're right there at the turning point, so it could turn either way right now significantly. Looks like.
If we break below blue and climbing, then look at all of these bottoms across here. That's potential support.
Yep.
And you got potential support right here where red turned to blue. And then you got support down here, which means we would put in a lower low and we would move this part of the fibs down. If the news is good and can get us above the BBC and above the 38, we still have this area as potential resistance, 58.44. And then the next major resistance is at the 50% reverse fib, 58.93. So anyway, I just wanted to point that out to you.
Good stuff. Well, it's coming together just like you said.
Recap of the morning session.
Today it took 5 minutes and one trade to get to $1,375 with 10 contracts on.
Good job.
Thank you. Thank you.
Okay, guys. We still got crude, gold, and silver to look at. This was the open last night. Again, the targets went out 5 minutes ahead of the open. So we came down to the BBC, found support. This basically consolidated sideways for quite a few hours. I mean, we had a leg and a retracement, a leg and a retracement. But then blue and climbing turned to red and falling. We get below the BBC. We instinctively anticipate lower prices. So it took us right down to the target. We even spiked the target. Now, of course, the target was just simply based off this low right here from yesterday. So we spiked that. Market found support down here. Okay. Just below this bullish cross. We spiked it. When you have a bullish cross, that's when the blue line gets above the green line that leads to an extended move. The first time price revisits that area, and it is an area, should almost always be good support. And it was, even though we spiked it just a tad. It's like we spiked it down to the low of that big doji right in there. So that support set us back to the BBC. Pull back holes more often than not. So that resistance set us looking for support. When red and falling gets directly below price, that becomes potential support because it's probably on its way to becoming blue and climbing. And so that took us up to the BBC, consolidated for a couple candles, then got a leg, then got a retracement. Now this odd candle here, that's the 9:30 opening candle on Wall Street. This thing was red all the way down to the zone that was published. The zone is 69.10/15 and the low is 69.12. Those are the zones that were published Monday morning at 6:15 a.m. Eastern. As I said, once they're published, Monday mornings, they're carved in stone for the entire week. They don't change in any way whatsoever. So the support from this zone sent us back above the BBC. Still got blue and climbing. So up we go, and we would anticipate resistance right here. Now when I created the targets last night, this high wasn't here. So I was keying off this high right here, okay? But what happened is on this move back up, this high where we opened last night, that became the resistance. That's the importance of learning to read the chart, okay? So even though that's still a valid target up there, because of the price action we saw at the open last night, you should instinctively have that marked as potential resistance. And we put in a beautiful 30-minute chart, double top right there. Resistance sends us looking for support, which we found at the BBC. Pullback holds more often than not. That support bounced us up into resistance at the step line. That resistance sent us back to the BBC. That support sent us back to resistance. Blue and climbing is now directly above price. We've spiked it a little bit, but we're probably heading back to the BBC. As you can see, the step line itself is pointing downwards. So I would look for price to come back, and you've got a lot of support evidenced here by the lows of these candles. So 69.55, that's a tight squeeze. You could go 69.55 to 45. Probably the better idea would be something like 69.30 to 69.20. That's sufficient to get your goal for the day. Gold, big huge day for gold and silver. Here's where we opened last night. We got above the BBC, right in the back of blue and climbing. Now when we hit the zone, we consolidated. When price encounters a weekly trading zone, 70% of the time you get consolidation, 20% of the time rejection, 10% of the time the slice. So we consolidated, and then we shot right up to the long target. In fact, we overshot it. The long target was simply a key off this triple top right here from yesterday. So we traded through it, and then we pulled back, and that very target became support. You should expect that until proven otherwise. Okay, this is an important price, important area. So when price breaks through it, retracement, whether you trade through the short target and then get a retracement, that becomes potential resistance. When you trade through the long target and get a retracement, that becomes potential support. So that sent us all the way up to 30.65 and a half. Okay, if you go look left far enough, you can see what's over there. Retracement to the BBC, we spiked it, and now we've got a high on the session at 30.70.9. We got a little double top right there. So that resistance is now sent price. We got blue and climbing directly above price. The step line is directly above price. So the most high probability thing to happen from here, even though we currently have a green candle, is to see price retrace back to the BBC, potentially the zone, That area is support times 2, and then an opportunity for another leg to the upside. In the event price were to come back and trade through that support times 2, then this area right here would be potential support. Remember, you only need a $1 move in the price of gold to get your goal for the day. A $1 move in gold is worth $100 per contract traded. A $1 move in silver is worth $5,000 per contract traded. A $1 move in crude, that's worth $1,000 per contract traded. So we opened last night at, we'll call it 30.26, and we put in a high at 30.71. So that's about a $4,000 per contract move. Silver. We opened at 34.21 and our highs 35.27. That right there is a $5,000 per contract move. We opened right at the BBC, but we had red and falling directly below us, which turned to blue and climbing, which gave us support, which took us right up to our long target based off that high right there from yesterday. Resistance sends the market looking for support, which it found at the BBC. Now these are 30-minute candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 4.5 hours. And then finally, this morning, the market sprung to life about 6 a.m. Eastern. We got a leg retracement, a leg, a deeper retracement, where we came all the way back to the zone and the VBC, and from there launched this move, which took us up to the high of the day. Keep in mind, you only need a 2-penny move in silver to get your goal for the day. One last look at the daily. This looks a lot different, or quite a bit different, than it did at the beginning of the broadcast. Okay? We talked about where we would close for the day and how important that is. We have high impact news tomorrow morning. So if we close below the 24% Fib retracement and below blue and climbing, then obviously the path of least resistance is to the downside. In fact, it's got a lot of work to do to flip this thing. Got to overcome the high of the day, which is at the step line. Now remember, for all these days, 1, 2, 3, 4, 5, 6 days, the black step line served as good support. Today, it's becoming, has been so far, good resistance. And we're just above that 24% Fib retracement. We've touched it. You can see the bottom of that doji rest right on the 24% Fib. But the fact that we have a doji means the institutional traders, the deep pockets that move price, they're not sure what to do next. We're technical traders, but there's so much going on in the world fundamentally. It's a tough call. It's a very tough call. So, to become a member, go to mytradingiq.com and see what we're all about, and send an email to support@cfrn.net. In the subject line, put, "I would like to become a member." In the body of the email, put your name, put your phone number. I'm not going to call you because we don't have a phone room or a sales department, but we will send you an info-packed email that explains everything it means to become a passport holder. Top of the list is 2 hours of live training every trading day. Now, an interactive environment. That's real trades in real time while you trade along in your demo account to qualify to go live and asking every question that pops into your head. Because it's a mechanical methodology or a rules-based methodology, if you ask every question that pops into your head, pretty soon you run out of questions. Now, you might word the question a little bit differently, but you're still going to get the same answer. Okay? We don't check the weather or anything else to see how we're going to trade on any given day. It's the same thing day after day after day. Is that boring? Maybe. If you're looking for an adrenaline rush, go skydiving on the weekends. The market should be where you earn your living, not get your yayas. Okay. 9 out of 10 new traders fail because they don't have a teacher. So we've plugged that hole with 2 hours of live training every trading day. Along with the 2 hours of group training every day, passport holders have access to private one-on-one mentoring, the strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. And that's why it's so important that you learn how to read the chart, so that you know where to expect resistance, where to expect support, which reveals the windows of opportunity that lie in between those 2 points. If you want to learn how to trade, you got to learn how to read the chart. That's why I say use the Logic 247 alerts to learn how to read the chart. It will show you why the entry's here, why the initial target's here, why the additional targets are here. And of course, every Logic alert has a final trade to target. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts every evening the second they're published. On Monday mornings, you'll get the weekly trading zones at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And you're able to attend the members only workshop, which happens every Thursday night at 8 p.m. Eastern. That's tonight. So if you've been on the trial, you still got time to send that email to support@cfrn.net. Tell us you want to become a member. We'll send you the information along with a link so you can become a passport holder and join us in the members only workshop tonight. And when you become a passport holder, you get the golden key that opens the private channels in Telegram. In Telegram, we have public channels, we have private channels. But As a passport holder, you get the golden key that opens all the channels. As a passport holder, you have access to everything. Okay, let's wrap it up with our good word for the day. Yesterday, we talked about changing how you pray. Today, let God remold you. 2 Corinthians 5:17. If anyone is in Christ, he is a new creation. What would you like to change about yourself? How would you change it? To ask it another way, what would your spouse or your best friend like you to change? Maybe that would be more enlightening. How would you end the sentence? It's just like me to blank. Fill in your own blank. Always be late, not stay on a diet, say the wrong thing, burst out in anger, be sad. Well, Jeremiah puts it this way in Jeremiah 13:23. Can a leopard take away its spots? Neither can you start doing good, for you have always done evil. So you say, I guess it's hopeless. No, not at all. This is where God's life-changing power comes into operation. If anyone is in Christ, he is a new creation. The old has passed away. Behold, the new has come. 2 Corinthians 5:17. Once we commit our lives to Christ, we're not the same any longer. A new life has begun. That's why the Bible calls it being born again. We immediately have a new nature, plus the indwelling Holy Spirit. A set of spiritual batteries is included to supply the power. And that makes all the difference. Just as your first birth was the beginning of your life, so the new birth is the beginning of this new life. And it's followed by a lifelong process depicted in Romans 12:2, which says, and do not be conformed to this world, but be transformed by the renewing of your mind, so that you may prove what the will of God is, that which is good and acceptable and perfect. And that's our good word for today. Reminder, members only workshop, 8 p.m. Eastern. Please have your questions ready. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.